Welcome to Trading Lounge and the US Indices report. We'll just be covering the S&P 500 starting on the monthly chart here. And in Elliott terms, as you know, we're looking for a 5-wave structure. So we've got wave 3 here, wave 4 here as an ABC correction. And then we're looking for 5 waves to the upside here for primary wave 5 to complete. And in this last leg here, we'll also be looking for 5 waves. And as you may know, we have wave 1 and 2 in play. And we're looking at building into wave 3, which should be quite strong. And then wave 4 and wave 5 here. And you know that in the Elliott pattern, when we're talking about wave 3, 4 and 5 here. So if we just draw a 1, 2, 3, 4, 5 here, then we'd be looking for an A wave and a B wave and a C wave that would pull back 50-60% of this 5-wave structure here. So you can imagine that having this wave 3, this wave 4 and this wave 5 here as this structure here, then move back down through here. So you'd be looking at the wave 4 of one lesser degree here. So you can see that the problems that we're having in the economy now in certain areas of the globe really just cracks in the pavement as such. And once this begins down through here, then the pain will really be felt, how bad it gets and so on, are sort of left open to interpretation. But when people perhaps start cashing in their US dollars and there's not enough US dollars to pay out, that could cause quite a problem as well. Anyway, I just think it's interesting to be able to think about, about this side of the market and think about it now, because when we go up in this 3rd wave here, then, it's going to look quite positive within the community, and even in the 4th and 5th, once it starts making new highs here, because once the market starts to make new highs, everybody's chirpy again. But it really needs some consideration on this side of the fence over here. So we got time to think about it, but I think that everybody needs to take a serious look at that situation, what it actually means. Anyway, drilling in here from wave 4. Don't want to start the day too on a negative note, but, stay with the reality of things, in Elliott terms anyway. So, from wave 4, we have wave 1, ABC for wave 2. We're looking at this as wave 1 and wave 2 here. And then we're looking for wave 3 up here, 4 and 5 to make this is minor wave 3, intermediate wave 4 here. So we're into minor wave 3, and then this is minute degree here. So we'll be in minute degree 3. So this will be really quite important because it will be the 3rd of the 3rd wave coming into this space here. And just drilling in here, where are we on the daily? We can go to the 4-hour just to pick up this wave 2 here. So in this instance here, we're looking at this as wave 1 here, an A wave and a B wave and a C wave for wave 2 to pull back to the 50-60% area through here. It may not pull all the way back down through here, but we'll be able to track where it is going and what price point we'll be looking at. So just on the 2-hour chart here, and on the 2-hour chart here, we can start to see the pattern a little bit more. So we're looking for 5 waves up here, which we have, and then we're looking for a turn here at these highs, 2100 roughly, and down for the A, back for the B, which is in play now, and then down for the C wave here. This C wave here will have some relationship to the wave A here in terms of length and time and those sorts of things. And then we start our move up here. Now, the important thing to confirm this next move up here, to actually confirm it, is that we need to see 3 waves here. So we need to confirm the A wave, the B wave, and the C wave. And that can be a little bit difficult until the top's taken out here. But that's what we need to be working on. We'll be able to do that earlier than that. We are looking for 5 waves in this wave 2 here. So just moving into the 15-minute chart here, just to open that up a little bit. So, in a nutshell, we had wave 1 up here. We're looking for 5 waves for the A wave. and then we're looking up for the B wave here, and I've got it established as an A and a B and a C wave coming up here. So we're looking for 5 waves up here. We're also looking for the 61.8% retracement level, and that's that current high here as well. But it wouldn't surprise me if we've got another little move up to complete into this space here. Once that is completed, then we can have a look at the next leg down for the ABC correction. So we'll be looking at from here, we'll be looking at 1, 2, 3, 4, 5. The length of this one here is the length of wave A here. So that brings us into this space here. This is also a 61.8 extension of this current B wave here as well. So, and this is the 50, 60%, 50 and 61.8% retracement. This is our original target here, and we may have to stick with that. And this is just an optional target here where it doesn't move all the way down here. But the thing is with this is that it's safer and more accurate to count the 5 waves. So as we come down, here's wave 1 and 2 and 3 and 4 and 5 here, and there'll also be 5 in this last wave here before we push higher as well. So we'll just count the waves to nail it in here. But once we have the structure in play, we really want to see wherever it comes from down here. We need to see 5 waves up here, and then we'll also see an ABC correction come back. And it's this, all these waves start to confirm things, you know, because if we get our 5 waves down here, say, and we only get to the 61.8% retracement level, we only get like 3 waves up here, and then it folds down here, then I know that we've got a bearish pattern in our midst. But we'll be looking for 5 waves. And if we get these 5 waves up here, then we can wait for the pullback, and then we can confirm our bull market at that stage. So there is a process and patience that we need to go through to nail it down. We can certainly get a certain sorts of biases coming in and so on. And our main bias is up. It's just that it's just nice to actually have the evidence in place step by step, and that's what we're going through at the moment. So yeah, I mean, as it stands at the moment here, it can be counted as 5 waves up here already, but let's just see how it goes. It's not like, it doesn't really matter what happens. Even if I've got this B wave counted wrongly here, and we put this A wave down the bottom here, which is also a viable scenario as well here, and then this can be an A wave here, a B wave here, and a C wave here with the B wave here. So still more to come here, but it doesn't matter because we wouldn't go long anywhere in here anyway unless we had a reason to do so. And the reason would be that the market comes up through here, makes the first high up here, has some type of correction here, and then we would look at being long above that reference point high above this level here, and then would be long from that point. So it's not in a long position. We knew that we would get a bounce off this area in here, this group 2 area here, and especially the 2072 area, and that's what's occurred. And we were looking for a move back to 2100 or the 61.8% mark. That's in place now, and we just really need to wait down through here. If you're going to short this, then one of the better shorts would be to find the bottom of the first wave here as the reference point, which will probably be about here, in fact, and then short it. So to have 5 waves down, 3 waves back up is your trade setup to short if you wanted to short this leg here. All right, that's that. You know, we could look at the DJ and the others, but they're all just the same at this particular point in time, and everything's on track, everything's perfect, and yeah, let's just wait for the right setup. I'm talking about the right setup for equity trades mainly, and long-term trends in the indices as well. Okay, cheers.